Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, founder, and president of the Oxen Group. We're a financial analysis, stock picking, and investment ideas firm, and you can check us out at www.theoxengroup.com. Well, this is the Oxen Group Nightly, so we're going to start out with a market recap for Monday. We'll also be talking about some of our new positions, such as Changyu and Apple, as well as some of our other current positions and exits. We'll also be looking at some of our results so we have so far through 2011 as the March month is done. So we have posted some new results. We'll forecast for tomorrow, and always check out our disclaimer at the end of the video. So it was a mixed day in the market. It was actually kind of overall a pretty, I think, lackluster day in the market. There's not a lot of volume, not a lot of people willing to really take any kind of key positions. It was a mixed day. Tech was weak today, but the Dow increased on the day as some materials were pretty strong. Oil rose above $108 per barrel. It hit a 30-month high. And then I think overall what we're seeing right now in the market is we got investors not really willing to sell off positions as we go into earnings, but also not really willing to buy new positions as we move into earnings. And I think that's going to start to change. I really don't think that people are going to want to not be in positions as we move into earnings. I really feel like we do have higher oil prices and we have the Japan issue, but I do think that we're going to continue to see some pretty strong earnings coming across the plate. And so leading us off next week, we have four big companies, and it's hard to imagine that these companies can't really help get some rallying going in some of their own sectors, which could lead to a nice market rally overall. Obviously, we have Alcoa leading us off on Monday. I'm expecting a good earnings report from them as steel prices have been good. We're also got JP Morgan Chase coming out. They're expecting huge earnings. I think about 30 points higher from them. We got Google coming out next week as well, and we also have Bank of America coming out. So we got four big names, big companies, bellwethers that all are going to be reporting, and it's very hard for me to imagine that both institutional investors, retail investors aren't going to want to position themselves at least into some things as we move into these earnings seasons because they don't want to get left behind, and that's why we often have a lot of buying and a lot of market. The market moving up, as we move into earnings season. So I expect to see some of that price action occurring. I know we have seen a lot of rallying, but I don't think it was because of earnings. I think it was a post, Japan and Libya crisis kind of a rally. And the market's sort of stalling right now, but I would say as we move into late week, this week, we get a little bit more economic data coming out. We should see some movement. As you can see, this is a very, very seesaw kind of day. Markets all over the place. This is a sign of low volume. Had a green morning. There wasn't really any reason to go down. We have I think we have some overvaluation in the market right now, but generally, there are the positions. A lot of positions were just kind of neutral pretty much all day. Some gains, a little bit of gains here, a little bit of losses there. And we had a late after lunch, we had pretty much a drop off, but seeing that market rallying into the finish, I thought was a bullish sign. However, it was on low volume and it was not a very strong rally. But again, it is good to see at least us buying up on dips, and the market, I think, won't allow us to decline too greatly as we move into earnings. I think any dips are going to be filled up, so I do think that you have to be aware of that as you're investing and you're trading moving into next week, that you're going to see a lot of your dips bought back up. One of the positions that we got in today was Changyu. This is an online video game company. They develop games online, and they are a company that has a lot of potential ahead of them in the Chinese internet space, a sector that's really been booming, and it's led by Baidu and Sina, Sohu, some of those kind of companies. And the company got an upgrade today from the street, and I think it's one of these companies that it sort of lagged the rest of the Chinese internet market simply from the fact that this is a company that's not very well known, has low volume, doesn't have a lot of attention drawn to it. And so I think as you see these upgrades come in and more people are starting to see Changyu, and this is a very good investment. We have this as rated as a buy in our long-term ratings portfolio, and we have a position in our long-term ratings portfolio. And but we also recommended or discussed, an entry of it today at 33.50, and the stock broke a major resistance line today on strong momentum and volume. And as you see, the stock here broke that 20-day moving average and settled above it, which is a very good sign, very bullish sign. And it's closing this gap that you see here that's at 35. The stock had good volume. I mean, it's not great volume compared to what we saw here, but relative to some of the other days, you saw good volume coming in the last to this day and the day before that, bring the stock up. So there was a lot of buyers, and the stock hasn't really jumped a lot from where it was when all those people bought that stock. So what that tells me is that this stock is has a lot of buyers in it right now. You see the fast stochastics on the stock; they're moving up, and it has an RSI below 50 still. So there's not a lot of, it's not overvalued, and it has a lot of potential ahead of it up to 35, where you see fill this gap, and that's where its 50-day moving average is. I don't see a lot of resistance there, and I think the Chinese internet market is one of those markets that just continues day after day after day to just continue to rally and rally, like the materials are, and like some of those ag stocks are. These stocks just continue to show strength, and there's really nothing holding them back at this point in time. A general market correction could pull them down, obviously, but I don't see a huge pullback happening unless we get some major catalyst to do that. And so I think you'll continue to see these kind of stocks tick up, and I think Changyu is starting to get that attention to it. So we definitely wanted to pick up a position in that, hoping for maybe a 3 or 4% gain on this stock. The position that we got into today that we like is Apple. This stock, as you can see, is nearing right now what we call the bottom of a channel. These are channels. So you see this channel here, and there's another one that's been made here. Okay, so there's an upward channel and there's a downward channel that's formed right now on the side. What that means is basically we have lower bottoming. So we've created lower bottoms and we've created lower tops. Okay, so what you have is you have two converging channels, and what that means is we're going to get a breakout. Okay, and the breakout is going to happen as we saw here. We had converging channels here as well. You hit this bottom of this channel and it pops up to the top of the channel. Now it's popping back down to the bottom of the channel. We expect it to pop back up to the channel in the short term. But in the long term, you know, in a swing trade kind of mode, a 2 to 3 week trade, what's happening in 2 weeks or 3 weeks? Apple's earnings. They're coming out. The company's expected to hit 5.32 EPS on 3.33 per year from 1 year ago. 70% growth in sales. The stock's PE ratio at current price with those consensus estimates will drop from 19 to 17, putting it below, well below Google, Adobe, sort of in line with Lenovo, and about 7 points ahead of you know, your HP and your Dell. So I think that's a very low price to earnings ratio for this company, and I think that the company has had a lot of analysts behind it. A lot of people saying this is still a good buy. This is a great company. They've just, you know, they got the iPad 2, they got the MacBook Air, they've got so many products that people want. I mean, and the stock just hasn't had that rallying mode yet. It hasn't just broken out. But we see the technicals kind of pointing towards this. It might be the day. It's kind of a reckoning day. I mean, the breakout could be lower. I mean, that's what those converging lines mean. I mean, the breakout could be lower. We just don't see with the sort of fundamental basis that you have there, with earnings coming up in 2 weeks, this stock being as low price as it is relative to where it was after the iPad 2 release, it looks like a really good trade right now, a good place to get in, bouncing off that bottom, hopefully moving up to around 350, getting, you know, around a 2 to 3% gain for you. Other current positions we have, we enter a short sale on MEMC Electronics today. WFR is the ticker. This company is about to re-enter their Japanese factories after, you know, shutting down production basically in Japan, and nobody really knows what's gonna be there. And the stock's shown a lot of weakness ever since, you know, the crisis happened. And then overall, this is not a very good company. Overall, we have it's the lowest rated company on our Oxen Group equity and analytics in the solar industry. Have a lot of debt. They haven't had a lot of good growth as of late, and overall the company is not a very solid fundamental company. At the same time, now you have some kind of negative catalyst that may be looming for the company that haven't maybe been fleshed out completely. So it's a good time to enter the stock on a short sale. I'm expecting that those negative sentiments will continue to sit there until they are either, you know, that they say, well, no, this is fine, and at which point probably the stock will rally. But in reality, you have to think this is a factory that's close to Fukushima nuclear reactors, and it's also was in line where the tsunamis happened. So you have to expect that production is going to be, they're going to probably not going to be able to go to full capacity, and they'll probably get a better idea of when they can get back to full capacity, which will then affect some of their, you know, earnings and some of their production, some of their revenue. Obviously, overall, not a reason why we want to buy this company, obviously. More like we want to sell them, so it's a good time to enter a short sale on them. We exited the last 1/3 of BP for close to a 2% gain this morning. And then we did have two positions that did not work out for us. A day trade, 2 day trades that we had in Ruth. We got stopped out for 1% loss from 508 to 5, but the stock rallied all the way up to about 5, I think 15 or 16 at the close. So just the timing just didn't work out for us exactly. And then Aria was a position that we also basically we got in. It went down to a stop, then rallied up during that whole market flush out. That's just the thing that happens with day trading. Sometimes you're going to get some quick losses like that when you get a quick market pullback. We try to set lower limits, stop losses, so we don't have that happen to us. But overall, I mean, the position in Ruth was neutralized by the gain in BP, and the ARIA position was a 25% position. So not a big deal. Most of our positions are still open. We also have a position open right now, which is not on here, in Ruby Tuesdays, which show a lot of good strength today. They have earnings on Thursday, and we're hoping to get some pretty strong movement from them tomorrow. We also recently posted our results through March on our unleveraged buy pick is now up 15% through March. Our leveraged buy portfolio is up 100%. That is a simulated portfolio, and our accuracy in the buy pick portfolio is up over 70%. It's at 71% right now. Our unleveraged short sale portfolio is up over 10% this year with accuracy over 80%. That compares to the S&P is up, I think close to 5%. With the Dow is up, I think about 5% as well, and the Russell Index is up about 6%. So we are outperforming the market pretty exceptionally, and if you have a leveraged portfolio, definitely very well outperforming the market. Tomorrow's forecast, market may continue to seesaw. We definitely are going to see, I think, a low volume, not a lot of movement, but we did have some pretty big mergers and acquisitions in after hours, with National Semiconductor being bought out by Texas Instruments, and that's a huge merger. Very good for tech, which has been weak as of late, and we are in Chengdu and in Apple, two tech companies. So that would be very good for us with our positions. We're excited about that. I think that could help NASDAQ definitely rally. Monsanto earnings are tomorrow morning. This could definitely have some helpful impact if they are good, and we do have some economic data coming out with ISM services, and the Fed minutes also are tomorrow. That's going to wrap us up for today. Please visit us at www.theoxengroup.com, email us at contact@theoxengroup.com, call us anytime, and be a part of our 70% plus accuracy.